We're going to start off with a quick look at the charts. And let's go over here. So last week, a couple things were happening, and let me scrunch this up a little bit so we get a little bigger view. I mentioned we've been kind of respecting this channel, and about 2 weeks ago we broke out, and I said that's kind of probably a bullish sign. I think a lot of people are viewing it that way. And then we sort of rallied up right below the 200-day moving average, which is this bigger line. And so last week, this red arrow right here was what we have on last week's call. This was the day of last week's call. And so if you missed that, you can go back and look at it. But what I said then, and I hope this is accurate because I know it's recorded so you can check me out. But what I said then is we came right up to the 200-day moving average, and it frequently acts as support and resistance. Not because there's any magic to the 200-day moving average. It's just that a lot of people are watching it, like everybody who's a trader, whether professional or on the side or even a part-time, novice trader. Many people pay attention to the 200-day simple moving average. It's a place where it's one of the ways that people determine, are we in bullish or bearish conditions? It's not the only way, but it's one of the ways. So what happens is a lot of times, when you get up to it, you'll have sellers that will come in there, thinking that, oh, we're going to bounce off that. Well, sure enough, the next several days, you can see we did kind of bang on it for a few days. Then yesterday we punched through it, and we're getting a little bit of follow through today. So we'll see what happens. Now, normally what happens in these conditions, and I talked about this last week, is, the market, that's why you got these funky yellow lines on here. I just was giving you an example. The market doesn't normally go straight up. It goes up, pulls back a little bit, goes up, pulls back a little bit. And so one of the places that you'll often see a pullback is, when you hit an area of support or resistance. And so we kind of saw that. You saw, we didn't pull back far, but we pulled back to this low. And when you're in bullish conditions, you don't pull back as far. And that's why you get this, overall upward movement. What may happen now, and I would say is a common pattern, if I shrink this up, is we may, I don't know if we'll go up for another day or two or not, but we may pull back, and now this 200-day moving average will act as support. That would not be uncommon. We get rid of a couple of these lines that I drew last week. So it would not be uncommon. It would not be uncommon to see us go up like this and then pull back to, somewhere where this 200-day moving average comes in, and then from there take off again. So again, we'll watch it. We don't know. The only indicator that we're using to manage our trades, the one that I use and the one that we've talked about, is the EWS indicator. Right now, again, we're seeing bullish conditions. Market internals look very positive. And and then I also, from last week, I've got the advanced decline line on here. You see it, remember, that's a breadth indicator. This shows us how many stocks are trading up versus trading down. And we see this also in the green, and tends to be trending along just fine, showing us that a lot of stocks are trading up, trading bullishly. So, we'll see where this goes, but this, is so far looking like a fairly common pattern. At some point, you'll have a deeper pullback, and then we'll go up from there. These cycles tend to have, macro cycles around them. But anyway, right now, I don't have any big concerns. I'm just, watching the EWS line as we do. We'll just keep on watching that, and we'll see if we can make it back to these all-time highs. We had all-time high of 48.08. We're a long way from that. We're at 42.20, so we're near 600 points away. So it might take some time, but we'll see if we can get back there.